I would say some of the main differences between investing in an ETF or an exchange traded fund versus direct shares is that an exchange traded fund is a type of trust. It's generally going to be listed on a public share market, such as the ASX. And when you're buying an ETF, you're buying units in that trust. And those units are going to afford you an indirect ownership in the underlying assets of that fund. And those assets are generally going to be designed to replicate a index. So if we're buying an ETF that tracks the ASX 200 as an example, when we buy units in that fund, we're going to be owning indirectly 200 companies through that ETF. So it's a really good low-cost solution to gain access to a diversified basket of investments in a single trade. As opposed to direct shares, we'd have to go and buy those shares individually. There'd likely be some additional brokerage costs there. However, some of the drawbacks of utilizing an ETF is that you don't have a direct interest in the underlying assets because it's a trust, so you have an indirect ownership of those assets. And there's going to be a management fee in most cases to utilize an ETF, although they're generally quite low, so there's still a really good low-cost solution for most investors. If you have any further questions, feel free to let me know.